When it comes to trading, you need to know how to get in and out of trades, because if you don't know how to get into the position to even get experience on entries, exits, and what's performing well for you and what's not performing well, you're not going to be able to succeed as a trader. So if you pay attention to this video, I promise you're going to understand how I personally get into the market, how I get out of the market, and my whole system when it comes to trade management and just being into a trade in general. What's going on, family? Welcome back to another video, and today I'm going to be giving you guys what you wanted. Yesterday I did a poll on my YouTube community. If you replied, then congratulations, you got what you wanted. I asked you guys if you wanted the 1 hour session that I did with the VIP members on my entries and my exits, and basically how I get into the market, my whole system when it comes to getting in and out of trades, and also my management plan, all the good stuff when it comes to actually being in a trade, actually being able to get into the position of winning a trade, get into the position of even getting into a trade to win or lose in the first place. So this is what it's gonna be. It's gonna be part one. Part one is gonna be 30 minutes of this pure game. If you want the real value, you gotta join VIP. But I'm still gonna give you guys that free game because that's what you're here for, right? That's why you're on the channel, for that free game, because it's YouTube, so you're gonna get it. Part two is gonna be uploaded tomorrow because I have to attend a funeral. So I won't be uploading a vlog, but I will be trading nonetheless. So if you're in VIP, you'll know. But tomorrow there won't be a vlog, but you will get the part two of this session. So without further ado, stay tuned and enjoy the video.
I'm not even going to be with the yapping. The main thing we're going to go over is exactly the system strategy I use when I get into the market now. We always go over the mindset, the psychology, because that's very important at the end of the day. But both are important. You need to have the system, you need to have the concepts and confidence within the concepts, so that it will help your psychology. It will help you be better equipped, have more confidence when going into these trades. You need to have both. It's like different phases in the trading. Phase one is learning the concepts, learning how to trade, how to get in and out of the trades, learning what you like more in the market. And then phase two will be learning yourself. Phase three, that will be putting it all together to actually get to those goals. Sometimes phase three may take 3 years, 4 years, 5, 6. It's different depending on each person. But when it comes to me, when I look to get into a trade, I'm only looking for two possible setups. I only have two types of setups that I ever look for. Now, you've probably heard them before. False breaks is one of them. If you pay attention to anything in the course, you know false breaks is one of them, and the other one is going to be fair value gap fills. Now, this is very simple. When people see me catching trades, when they see the trades I post on YouTube, when they see the trades I post on Instagram, the private inner circle, VIP, the two main concepts I'm using are these right here. You've got to remember, you don't want to overcomplicate trading. You want to have something very simple that is very repetitive, something that happens every single day, every single week, so that you can constantly come back. And even if you're not trading every single day, you can constantly come back and take a setup. You can constantly come back and be able to predict something that is more than likely going to happen. And why is that important? Because at the end of the day, if you want to be able to trade for a living, if you want to be able to trade full time, make money from trading, you're going to need to have a system that you can constantly do the same thing. Because just like with your job, you have a constant routine, a constant schedule, constant hours every single week that you're going to get paid for. Trading isn't like that. You have to be the one that secures a setup that is going to always happen. You have to be the one that secures a possible system or strategy that is going to constantly give you results that you can capitalize off of. Because you can have the best strategy in the world, but if you're not getting enough trades, you may only get one trade a month, one trade a week, one trade every couple months. It really depends on each type of person. At the end of the day, the types of you just learn from experience, but you need to have something that's replicatable, something that you could come to charts and literally do every day. That's how you make money trading. That's how the people that make money trading make money, because they have something that they know works. Maybe it's one or two things, maybe it's 2, 3 things, but they have something that they've back tested. They have something that they know works, and all they do is come to the charts, implement it, win or loss, implement it, win or loss, just on to the next, because they know long term, they know over 100 trades, over 1,000 trades, they're going to win. So false breaks and fair value gap fills. So we're going to go over false break first. So what is a false break? You guys have more than likely already heard of breakouts, breakout strategies. When you're looking for price to continue a direction it's been going. So say, for example, price is pushing, it keeps going to this high. Some people may be expecting price potentially break out and go higher. But me personally, I like to go on the side of looking for false break moves. Now with false break moves, these a lot of the time bet on the fact that after price runs an old high or low, in this case, the high that it ran will be these highs right here. After price ran those highs, I like to look for moves like this, and it doesn't have to be this exact way. You can do it vice versa if it was upside down. I just ideally like these false break moves, and the main reason I like these false break moves is because everyone trades breakouts. Most newer traders trade breakouts, and a lot of them are trading on the lower time frame. So a lot of the time, those lower time frame breakouts end up just trapping them, end up just cooking them. But if you pay attention to the overall trend in the market, if you're paying attention to higher time frames, if you understand what's going on in the grand scheme of things, in the bigger picture, these false breaks will be easier to spot. And if you're on the higher time frames, you're going to get way less of them. That's always what I try to stress to people. Yes, the lower time frame is going to have the same types of setups. Yes, but it's going to have more of them. It's going to have more setups that aren't going to be as big moves. But the higher the time frame, you're going to have less setups. But those setups that you catch are going to actually be able to play out. They're actually going to move a good distance. That's why I like higher time frames. So by higher time frames, like you can look at the time frames I use. I use the 1 hour, the 4 hour, the daily. Those are like my lowest three. Anything else is the weekly and monthly, but those are stuff that I kind of look maybe every couple of weeks. The monthly chart isn't going to change every couple of days. It's just not. But the 1 hour, the 4 hour, and the daily, personally, I don't go lower. I may go lower on a very specific occasion if I absolutely see nothing on those 3 time frames. But even on days like that, I would rather not trade at all than start to look for trades. You guys always got to remember that. If you look for a trade, you will find one. You will find one. There's enough ways to get into the market. There's enough different concepts, different strategies that if you're looking for a way to get in, you will find a way. But you need to find your way. That's the main thing, because there's 100 ways to get into the market. There's 100 ways to catch a trade. There's 100 ways you can win or lose. But if you have your way, you just got to follow that regardless if you win or lose, because you know it's going to work overall. But this is a basic schematic of what a false break is. Now, what is a fair value gap fill? Fair value gap fill goes on the basis of liquidity. Just like that old high that price ran up here that created a false break move, just like this. This is a move based off of liquidity. Where was the liquidity? Above the old high that got ran. So right in there. And the liquidity ended up giving that move. Now, when it comes to fair value gaps are another form of liquidity, but just in the form of gaps. How would that look? In this case, something that a fair value gap might do is price may be doing whatever it's doing, pushes a certain direction, and in the midst of having that big push higher, it leaves gaps in between those large body candles. A lot of the time, if you want to find easy gaps, look at the biggest candles. The biggest candles usually have the easiest to see gaps just because there's a big range in between. The smaller the candle, it doesn't mean that it's not a gap. It's just going to be harder to spot. You always want to keep everything simple. If I were to go to the 4 hour time frame right now and look for the closest gap, the closest one I would see is right here, right? Just because I'm keeping it simple. I'm not trying to overcomplicate it. I always look for where we are right now. That's what everyone needs to understand. When you're a day trader, if you're looking for a trade that you're only going to be in for an hour, maybe 2 hours, there's no point of you looking 50 days in the past, because that's not going to affect what you're looking at right now. We want to know what's likely going to happen in the next 30 minutes, 50 minutes, hour, 2 hours, the rest of the day. That's it. And in my opinion, just keeping it simple by being able to just look at the higher time frame, understanding, keeping it simple. You don't want to look for too much. Higher time frame mixed with just having a specific type of setup. In this case would be my false break, and it would be my fair value gap fills. Just, you want to keep it simple, trust. But these are like the 2 schematics. Where would the gap be created? In this case, the gap will be somewhere in here. Now, the main thing you would want to do is find the high probability gaps, because just like everything else, just like false breaks, just like breakouts, just like all of that, you're going to find a whole bunch of them. They're everywhere. There's 1,000 ways to get into the market, 1,000 ways to get out. There's literally thousands upon thousands. You got to do what you are doing. You got to follow your system, your rules, your strategy. In this case, this is like what the 2 setups look like. Just keeping it simple, like me trying to draw it for a 10-year-old type shit. Now I want to actually show you it in the charts itself. So you see what this looks like. Both these are based off of liquidity. Where's the liquidity in the false break move? The liquidity is when price runs above the old highs or lows. And this is where I would ideally like to take my short. Or if I was vice versa, that's where I would like to take my long. If you look at the fair value gap fill, price tends to have a push or drop in a specific direction that ends up leaving gaps behind. And in those gaps, that's where me personally, I would like to take advantage of the move. Now, if you look at those yellow circles, the yellow circles are just really showing you where I would be wanting to enter on these types of moves. So in this case, the false break moves, I would be looking to enter when price runs to old highs, right in here. Fair value gap fill, I'll be looking to enter once price comes back into the gap. Now that's like keeping it very simple. Now me showing you that isn't necessarily going to make you a great trader. Now you got to be able to spot it in the actual charts. It's the same thing with backtesting. People can backtest all they want. They can go and backtest months on months on months, but you got to be able to see it while it's happening. You got to be able to see it live. You got to be able to do all these things in real time, because at the end of the day, backtesting is only going to show you what it looks like after the fact. Seeing it real time, seeing it before it happens, as it's happening, and having the confidence to actually take advantage of it is totally different. It's not the same, but it's something that is necessary. At the end of the day, until you backtest, you're not going to have the confidence to even take those trades in the first place. So now we're going to go find examples of these trades. So I'm pretty sure if I go to NAS 100, NAS 100 had a great move. Now, I always tell you guys, the second most important thing next to liquidity is timing. Simple as that. Time and price is everything. What is liquidity? Liquidity is the reason the market is moving where it's going. What is time? Time is the reason we're getting that volume when it's moving. So price is the reason it's going to go where it's going to go. And time, which brings the volume, is when it's going to actually go there. Does that make sense? Without both, you're kind of just, you're going to be just in the free range at the end of the day, in my opinion. You're not really, it's not going to be structured. You could win the trade, you could lose the trade. But if you structure yourself within the aspects of understanding liquidity and understanding the importance of timing, you're always going to put yourself on the right side. Even if you're not always right, even if you're not always wrong, you'll end up on the right side more than you're wrong. And that's the main thing. We're all going to lose trades. We're all going to have losing days. We're all going to have losing weeks. Some of us are going to have losing months. But it's about where we end up 5 years from now, where we're going to end up at the end of the month, at the end of the year. Losses happen. It's about being able to handle them. And how do you handle them? By having the confidence that your setups are going to keep happening. Most people don't have that confidence. Most people haven't back tested long enough to see that their trades happen every single day, happen every single week, every single month. And if they don't know that, they're going to come to the charts. If they miss one trade, they're going to think, oh, I might never get that again. They're going to think, damn, I missed that. I might have to wait a month. But the person that understands their system, has the data, has all these things, they'll know, okay, I missed it. I know it's likely going to come back. I know it's likely going to come back again this week. I know it's likely going to come back next week. I know that the chance of it not happening again for 5 months, 6 months is highly unlikely. But that comes with experience. So the first thing I see here, just keeping it simple, I see a false break move. I see a false break move of an old high, which in this case would be, yo, what's up, bros? Essentially, we have that high right here. Now this high, I would classify as a previous day's high. Last session that we had, I gave you guys like my little markup process on everything I do when it comes to going onto the charts. And the first thing I always do is I mark up previous day's highs and previous day's lows. Why do I mark up the previous day's highs and lows? It goes into what I was just saying. The most important things are liquidity and time. The previous day's highs and previous day's lows, all it is high probability liquidity. That's all it is. When you think about previous day's high or previous day's low, all I want you to think of is liquidity. That's it. That doesn't mean it's going to have a move off it. That doesn't mean it's going to use it to target it. All you know is at that previous day's high or low, there's going to be orders. Orders in the form of what? Liquidity. And what is liquidity? Money. What is money? Money is what's going to cause price to have its reactions where it does. Okay? So now that we understand where to look, where to pay attention to with our eyes, previous day's high. Okay, we're going to watch it now. Doesn't mean we're going to hop into a trade. It's just us being aware of, okay, I know where to paint my eyes. Remember how I keep telling you guys there's 1,000 ways to get into the market, 1,000 ways to get into a trade. You have to know what your way of getting in is. And once you know what it is, you got to spot it. In this case, the day that I'm talking about in specific is going to be this day. So when you look at the chart, just look at this day specifically. Why is this day important? Right up here at 8:30. So remember what I said about time and price. Time and price is important. 8:30 is very important. What do you know about 8:30? 8:30 a lot of the time is going to be the open of the New York Stock Exchange. Well, not the New York, like the open of the New York session. Not the Stock Exchange open, but the New York session. Like when volume starts to come in, when all that news starts to come in, 8:30 is like that first like primer. Like it goes 8:30, 9 o'clock, 9:30, 10 o'clock, and then from there slowly dies off. But 8:30 is like that first time where there's high volume news, there's news in general. And on this day specifically, this was CPI. Now, CPI, I told you guys you shouldn't be trading. But at the end of the day, CPI isn't going to do nothing the market hasn't already done. That doesn't mean you should trade it, because at the end of the day, you could trade it knowing the right direction, having the right idea, and still lose just because the amount of volume in the market. it's better to stay away in environments like this than to get in. It doesn't mean you can't catch a trade. You could have easily caught the trade. You could have easily made money. You could have easily lost money. It's just about understanding what's higher probability. The chance of you losing more money than making more money is more likely. So it just doesn't make sense to trade those types of days. But back to what I was saying, why was this move important? Because if we go back to the types of trades I look for, we're either looking for false breaks or fair value gap fills, right? Aligned with the right time. That's the main thing. If these moves are happening, but it's happening in, say, for example, London session. If it's happening during the Asian session, I'm not going to take the move. I'm not. It doesn't matter that my setup is happening, but my setup and rules have to all align. Time has to be there. Price has to be there. It's not just one or the other. It needs to have both. Because if I have one and not the other, the chance of me not actually having the trade play out is going to be far more likely. Far more likely. Our goal when it comes to trading is to be able to put our money on trades that is going to make more money. We're not going to take a trade that we don't have confidence in. It doesn't make sense. If you take a trade, you're like thinking, yeah, the chance of me losing this is more likely than winning. You wouldn't have took that fucking trade. At the end of the day, our trades, we want to put them in the highest probability environments. We want to put them in situations where the likelihood of it winning is significantly bigger than losing, because we know what those winning trades and losing trades could do to us. One winning trade is easy. Anybody could win a trade. Anybody could win a trade and walk away. But one loss, the equivalent to that one win and one loss, that one loss will make you overtrade, make you over leverage. It will make you lose confidence in yourself. It will make you think that you're not a good trader. It will do all of these things just from that one little loss. So you just got to understand the power that each of them holds. So in this case, 8:30 time. What happened? I was looking for either one or two types of moves, either a false break or a fair value gap fill. In this case, I'll draw a little schematic of what happened. We had this red line, which is the previous day's high. Price came above it at 8:30, which is a high probability news time. When time and price align, these are the environments where you got to take the trade. If this is your setup, you have to take the trade. And if you don't take the trade, you got to watch the trade and plan how you would have taken advantage of it after it happens. That's the only way you're going to learn. Yes, you can go and back test it, but until you're there real time, until you're sitting here at 8:30 watching it run this previous day's high during your time and take the trade, you're not going to actually have that confidence to say, okay, this is something that I could do. This is something that works. So in this case, how would I have taken advantage of this? How would I have caught this move based off of how I trade? What would have my thought process been? So in this case, if I would have been looking for an overall short at this previous day's high at 8:30, I simply would have been waiting for price to get this main push. Now, me personally, I like to get safer entries. I'm risky, but I also try to get the safest risky entry. I'm not sitting here trying to catch the highest point. I'm okay with getting in early as long as I can like solidify and I can basically guarantee that I'll at least be in the trade. So me personally, some people may have waited for price to come all the way above the previous day's high, maybe come a little bit higher. Me personally, I'm going to get in as soon as it runs that previous day's high. If I know I'm bearish, if I know I want to see price go lower and I see that it's lining up with my time, I will go short right where those areas are. Now, in this case, if this was the Asian session high, I would have sold at the Asian session high. If I would have been maybe looking for, if this would have been maybe like the previous day's low, could have been the same thing. You guys just got to understand the universal concepts. Why was this area important? It was the previous day's high. Why is the previous day's high important? That's an area of high probability liquidity. Why is high probability liquidity important? Because my two setups, the only setups I take when it comes to me getting in or out of a trade, I'm only looking for false breaks or for value gap fills. And both of these setups are 100% based off of time and liquidity. So if I see my setup happening at either a previous day's high, a previous day's low, a fair value gap at the right time, I just take the trade. That's it. I don't try to overcomplicate it. Some people, they try to find 5, 10 different reasons to get into a trade, but the only reason you're doing that is because you're not confident in it yet. That's only it. I had this conversation with Haven, with his indicators. Indicators aren't bad, but indicators are just giving you that extra confidence you need that you don't have yet. That's really all it is, because the indicator is not going to show you anything that the chart's not already showing you. The indicator is not going to let you do nothing that you can't do without the indicator. It's just kind of giving you like that little training wheels to kind of, like with the little lane splits with the bowling, it just keeps you safe. It keeps you like that extra confidence. That's all it is. But once you get to a point to where you've caught the same trades, you've done the same thing, it's happening back to back, back to back, back to back, every week, every month. You have actual notes on it. You have journal like trades of it. Then you're going to be like, okay, I don't necessarily need this no more. I'm using what I used it for without it. So then you just kind of eventually level up. It's like different phases to your journeys, different phases to your education. But in this case, I'm going to show you exactly why I don't trade CPI. I would have gotten in right at this high. Now, me personally, I don't try to use more than 50-point stop loss. So if I would have been shorting this trade right at the previous high with a 50-point stop loss on NAS, like keep in mind, I usually use a 50-point stop loss on 30. Even if I would have used a 50-point on NAS at this previous high, the amount of volume from CPI still would have stopped me out before it went lower. Crazy to think about, right? I could have potentially caused this move based off the same ideas, but you got to understand, days like this where it's like CPI, you can have the perfect idea, but these wicks, they will get you. And it's just not worth it a lot of the time to try to even potentially catch it. Because yeah, anybody could have caught the move. Anybody could have easily said they did it. But if now you do that, you're also going to build the idea that you can trade these days, that you can catch these moves. And I promise you, all it takes is one bad trade. We already know this. Y'all saw the CPI video. I could have traded 4 CPIs in a row, won every single one. And as soon as that one CPI, the one I showed you the video of, happened, I still could have lost everything from all those other CPIs. Just from that one, even though the other ones were good, just that one could have ruined all of it. And it's just, you got to understand what days you should put risk on, what days you shouldn't put risk on. You got to know what days are higher probability than others. There's a reason I don't need to trade every day. I could have traded Friday. I could have maybe made money. I could have traded Tuesday or Monday, whichever day it was I didn't trade. But you got to know what environments are going to be better for your money. At the end of the day, all we're doing is risking money to make more money. A lot of you guys, you probably have jobs. Your job, you're trading your time for money. You're not trading what you're actually doing. There's days I guarantee some of you go to work and you don't really, it's just an easy day. You're just like slacking off. You're just there, but you're still going to get paid because you're getting paid for your time, not necessarily what you're actually doing. Vice versa, in trading, you're getting paid based off of money that you're risking. You get paid based on how much money you're willing to risk. So you want to be able to put your money in environments that are going to be more than likely going to win, because we don't want to say we put $100 on a trade just to lose that $100. That we don't plan for that. We know losses happen, but that's not our goal going into a trade. It just doesn't make sense. Always understand higher probability. Understand when you get into a trade, you got to go over what are the chances of this playing out? Is this the best idea? Is there a better idea? Where is my money going to be working the best? You want to put it in good situations. That's something you always got to remember. And that's why me personally, I like to trade the way I trade, because if you also notice, a lot of the times with the way I trade, I'm catching very high and low points. I'm getting in very close to either the highs or getting very close to the lows. And I'm not purposely trying to get those highs and lows. It's just what happens based off the way I trade. When you trade false break moves like this, a lot of the time the moves that end up being big wicks end up being moves that we could have potentially caught. And there's a reason I look at that. I've back tested where the big moves happen. I've back tested when the big moves, like the times that they happen, the sessions that they happen, the days that they happen. And all of those different things and experience and me going through it has led me to the type of trading I do now. Something that literally happens. I can get a trade every week. Like I could literally get a trade every day if I wanted to. With what my system is, it's very like simple to the point where I can come to the charts every day and I will find something. That doesn't mean I'm going to win the trade, but I will find something. So I have to limit myself. Versus, you can have the very opposite. You can have a very system that's very specific, very critique, that you may only get one, two trades a week. And that's perfectly fine. You just got to know what works best for you. Me personally, I'm not as patient as some people. I'm not as patient. Some people are more patient. Some people aren't as patient. You got to know yourself. Me, I can't hold a trade all week. I can't do it. I can barely hold a trade all day. All week, yeah, I'm cooked. So with that being said, I had to find one or two. I used to try to trade one setup, but I wasn't getting it enough. I would have days where I would come to the charts 2-3 hours and not get no trade. That's not me. I'd like to have the option of, if I don't see one thing, I can look for another. If I don't see neither of them, at least, okay, now I can call it a day. Now I can walk away. But after one shot, in my opinion, I don't know, maybe I'm just not lucky, but a lot of the time, my first trade isn't the one that wins. It's usually like my second trade. And a lot of the time, like one day trading isn't going to be the only, not day trading. One setup you see isn't going to be the only setup that's there that day. You may have one setup, but you may not get that day. But if you have two, you're giving yourself the option. But now once you start going 3, 4, 5, now you're kind of just making it so like regardless, you're going to find something. You don't want to do that because you will find something. If you want to trade, you will find it. If you want to risk money, the market will allow you to risk it. You got to keep yourself safe in these environments. But this will be one example right here of 8:30, time and price having a false break move. Price ran above the previous day's high at 8:30. The overall trend was already bearish, so you were just following this trend. And that's really it. Just you want to keep it simple. So when it comes to false breaks, where are the areas you want to pay attention to? Because I told you guys false breaks are just when price runs above old high or low during your ideal time, whether it's 8:30, 9:30, 10 o'clock. If it's London session, maybe it's 3 a.m. But you want to pay attention to the false break. So now I'm going to give you guys the game. Where do you want to pay attention to? Where do you want to look for these false breaks? I'm about to blow your mind. So look, remember how I went over last session, everything I mark up, my whole markup process, how you want to make everything simple? What do you think my areas that I'm paying attention to are that my false breaks are? Take a wild guess. If you guess previous day's highs and lows, you were right. If you guess the Asian session highs and lows, you were right. If you guess fair value gaps, you are right. Because also you guys always got to remember, at the end of the day, the market is only a few things. The market is literally highs and lows and candles. That's it. Like that's all it is. Time and price. All we got to look at is candles, time, and price. When it comes to where you're looking for the false break moves, there's a reason when I come to the charts, I mark up the previous day's high. There's a reason the Asian session is already marked up. And there's a reason that I mark up the fair value gaps. Because every single day, I have the system in place to where I'm marking up the only areas that I'm even going to be able to take a trade at. Like if you guys notice, like when you come to the sessions, I come to the charts, I do my little markup, I might find an area or two, and then that's really it. I just watch those areas or two. If they work out, they work out. If they don't play out, and then usually that's really it. There's not a lot of times where I have to make a whole different analysis. Like there's not a lot of times where I literally delete everything. I'm like, let me try to see what else is happening. No, I go off of a lot of time what I first see based off of the high time, basically the high probability areas. Where's the previous day's high or low? Where's the Asian session high or low? Are we near any of them? Are we going to run any of them? Does it look like we're going to run any of them? What is the previous day's trend? Was the previous day's trend bullish or bearish? If it was bullish, the chance of today being bullish is more likely. You guys always want to remember that. To understand the trend, you don't got to overcomplicate it because I would be lying to you if I came to the chart saying, yeah, I know today's going to be bullish. I know today's going to go long. No, I would be 100% lying to you. You got to go off of what you think is more likely. If yesterday was bullish, the chance of today being bullish is more likely. That's just a fact. There's no in between. Doesn't mean it's going to go bullish, but the chances are higher. And that's all that matters. I'm putting myself in environments that are more than likely going to play out versus more than likely not going to play out. That doesn't mean I'm going to win. That doesn't mean I'm going to lose, but I'm putting myself in the situations that I know that can result in the reactions from the market that I'm looking for, from these previous day's highs, from these Asian session highs or lows, from these fair value gaps. Just mixed with time. That's the main thing. Always remember this. Time. Time is everything. Don't take any trades unless it aligns with your time. Because it could be the best trade idea in the world. It could be perfect. It could look everything you can imagine plus more. But if it's not in this right time, you may not get the volume. You may sit in that trade for 6 hours, 10 hours, 12 hours. You may sit in that trade for 24 hours. Who knows? I can't do that. If you want to do that, go ahead. But I'm not going to wait 24 hours for a trade for a chance for it to come back to stop me out or for a chance to me stop break even. Time is money, and that's a lot of money wasted in my opinion. Now, each their own. Everyone has a different life. Everyone's going to have different schedules to where they have to work their job. They could trade. It's different. But that's why I always tell you guys, experience is key. You got to figure out what works best for you. For you. What works best for me may not be the same. This is what I do all day, every day. I can come to the charts at the same time every day. Other people can't do that. You got to figure out what works best for you. Now, in my opinion, the charts itself, the setups I've been going over with you, they work for anybody. That's just the market. But if you're going to actually like taking those trades, if you're going to have the confidence taking those trades, that comes down to something that you're going to have to backtest, something that you're going to have to take these trades as they're happening. Because I know people like Hino. He wouldn't be able to trade like me off rip. That's something that he would have to slowly, gradually build into because we trade so differently. We've evolved different ways. We've grown different habits that will just make things a little bit different for us. And that's perfectly fine. That's a lot of people. But this was false break move. I want to find an example of a fair value gap move. And trust me, guys, after the session, all you got to do is go back test this. Trust me, everything you need to know when it comes to entries and exits, when it comes to the market, what the market is going to do, is all in the charts. Like everything that's ever happened on the charts is here. Everything that's going to happen has already happened. There's people that before COVID, they knew that the market was going to crash. How do you even possibly predict that? Because the market it's very repetitive. It's very repetitive. The same things that happened right before COVID happened right before 2008. The same things that happened right before a big like bullish run in crypto happens again before bullish runs in crypto. Can you talk about funded? So I'm interested to get one to show my ability. I would say funded accounts. It could be a hit or miss. It's like it really comes down to you. Until you really think you're confident in it, you just got to go for it. But it's like the same thing with funded accounts versus regular personal accounts. If you don't have the system or strategy to where you know you're going to make a certain amount of money in a certain amount of time, you will continually buy challenges and blow through them just like you'll blow through challenge, just like a regular account. Like there's no in between. And until you actually have the discipline to trade right, to actually follow your rules, to where you actually have 6 months to a year of documented data to where you know what is the likelihood of you winning your next trade? What is your win rate? What is your average risk reward? What are your setups that make you the most money? What days should you be trading versus you shouldn't be trading? I wouldn't go for a challenge because I've gone through probably $10,000 to $15,000 in challenges. That's just gone. It's just 100% gone. That money, I use real money, try to get fake money. I try to think about that. That's just crazy. So I wouldn't go through it until you're like 1,000% confident. Because if you're 1,000% confident, you should pass it. And if you don't pass it, then that'll just tell you, okay, I'm doing something wrong. And that's what you got to remember. That's fine going for these challenges, but if you lose them or fail them, you have to learn what you're doing wrong. Because if you don't, it's going to constantly keep happening. And with a challenge, it's very different from an actual live account. Because in a live account, if you make mistakes, if you do something right, you can at least still make money, withdraw money. If you make mistakes on a prop firm account, all that money you made is nothing. It's nothing. It's just gone. It's just nothing. So it's a very big waste of time if you're not actually going to 100% take advantage of it. A lot of time is going to waste in challenges. Trust me. But if you just focus on the actual process itself, making sure that if you have 100 trades, you know what the likelihood of you winning those trades are, what times you should be getting in, then I will go for a challenge. But until you're ready, until you could say you're ready, I wouldn't go for it. If you think you're ready, you want to know till you go for it. And if you go through it, you're either going to pass or fail. You'll get the results you're looking for.